Hello, I'd like to welcome everyone to the latest edition of our Big Questions in Land Management webinar. My name is Kyle Walker, and I am the Director of Land Management here at Peoples Company. I work out of the Central Iowa location, specifically Indianola, and I focus on improving our land management platform and service offerings for clients. Today, we have some industry experts here who will be discussing the following management topics: locating and accessing tax deductions for landowners, commodity updates, digital irrigation management, and succession and estate planning. Hopefully you'll find this information useful when considering your operational goals and heading into this fall in advance of the coming crop year. I would like to start by giving you a brief overview of Peoples Company and the services we offer. Peoples Company has a national footprint with offices in all the major U.S. ag markets. Our offices are located in Walla Walla, Washington, San Diego and Fresno, California, Tulsa, Oklahoma, Jonesboro, Arkansas, Arlington, Tennessee, Monroe, Louisiana, Centralia and Wentzville, Missouri, Marlette, Michigan, Omaha, Nebraska, and DeWitt, Indianola, Independence, and Clive, Iowa. We're a full-service land transaction provider offering land management, land brokerage and sales, valuations and appraisal, investment services, and our new divisions of energy management and crop insurance services. Our team has grown significantly since I've been involved over the last 10 years, and we have roughly 150 land professionals now spread across the country. Today, we're going to be focusing on topics relevant to the land management division. I encourage anyone interested in learning more about the other divisions of Peoples Company to visit www.peoplescompany.com. A real quick overview of our management platform. Our service offerings emphasize sustainable agricultural practices that drive asset appreciation. We document productivity, conservation practices, capital improvement projects on each and every one of our farms. Our platform is built to increase crop yields, boost income, improve soil health, and ensure continuous farm improvement for the next generation. All of our farms are currently enrolled and managed to the leading harvest sustainability standard. Adherence to these 13 core principles provide assurance that your farms are being managed for sustainability and long-term appreciation. Above in the slide, you see the 6-step proven process. This clearly defines our goals and objectives, and we can run this through with anybody who'd be interested in learning more about our platform and the 6 steps that we engage in. We typically deliver 2 reports on a given year. These would include the annual business plan, which documents the previous year's production information, and an annual summer report, which documents the current crop and growing conditions throughout the spring and summer months. We also offer accounting to those clients who need monthly or quarterly statements. Just a couple of quick reminders. Please remember lease termination deadlines are quickly approaching. Specifically here in Iowa, termination deadline is September 1st. So please let us know if you have any questions on these and reach out, and we'll try and help depending on what state or location you're in. Last thing here, I briefly wanted to touch on the upcoming 17th Annual Land Investment Expo, which will be held at the Iowa Event Center in downtown Des Moines. The Land Expo has become a main event for investors, rural professionals, and trade voices across the ag industry. In past years, we've had high-profile keynotes such as Donald Trump, Sam Zell, Jimmy Johns, T. Boone Pickens, and Martha Stewart, to name a few. This year should not disappoint, and we're excited to announce that we have a commitment from former NFL Pro Bowl quarterback Drew Bledsoe, the owner of Doubleback Winery in Walla Walla, Washington, Esther George, former president and CEO of the Federal Reserve Bank of Kansas, James Gallagher, Thomas Honig, and Willis Sparks will also be there, among many others. If you're interested, please register for the early bird pricing, and we look forward to having you join us for the Land Investment Expo on January 9th of 2024. Real quick before we begin, if you have any questions, please type them in the comments section below, and we'll try and answer them at the end of the webinar. Now, without any delay, I'll get on to the first speaker, which is Tyler Bruch, who will be discussing locating and accessing tax deductions for landowners. Tyler is the co-founder of Safra Ag, a company that works with ag professionals across the USA on soil fertility appraisals with a focus on IRC Section 180. Safra has worked in 42 different states and has over 1,000 clients that have taken advantage of Section IRC 180, resulting in significant tax savings. Tyler and his wife Amy own and operate Cyclone Farms in central Nebraska, where they raise food-grade organic crops for a wide array of end users, contacts in the U.S. and abroad. With that, Tyler, are you ready to share your screen?
Yes, Kyle. Got that there, Kyle?
I do. Thank you.
All right. Well, thanks, Kyle, for the introduction, and thank you to Peoples for having us on today. Excited to be here, and thanks to Kathy for putting a lot of the back office work together on this. So we're going to talk a little bit about what we do at Safra, soil fertility load analysis for landowners, and what that means. You know, a lot of folks that own farmland and have purchased farmland are familiar with the advantages of taking assets that come with the purchase, such as drainage tile, fences, buildings, irrigation equipment, and using those as deductions off their taxes. So even though you bought that asset, the farmland, and those ancillary assets came along with it, and you're able to take depreciation against those. But what a lot of people aren't familiar with is the ability to take a deduction on the plant available excess soil fertility that you're also acquiring with that farm. So, you know, you're buying a farm and you're getting a lot of fertility that's coming with it. You can't see it, touch it, smell it, or feel it, but it's obviously there and it has a tremendous value. And what we do as a company is we come in and figure out what that plant available fertility is, what that value is. We quantify and qualify that through a very detailed report. And when we get done, that report then is ready to go directly to your CPA or your accountant to take advantage of that deduction. So that in a nutshell is kind of the macro view of what we do. And we're going to break through some of the numbers on this and how it folks that qualify or don't qualify for it and some of the particulars to it. So Section 180 is tax provision in the code. Most folks in ag are familiar with Section 179. Section 180 sits right along next to it. And as the IRS code right there says, has provisions which may allow landowners to take residual fertility present in the soil at time of purchase as a deductible cost for agricultural production. So really, if you look through that code that's pulled right out of the IRS code, residual fertility is a capital asset in the hands of the taxpayer. And taxpayers can take advantage of that through a couple different ways. Section 180, which allows you to take 100% of that deduction in the year that asset was acquired. So if you bought a farm in 2023, you can take 100% of that soil fertility as a deduction off your 2023 taxes. Now, if you bought it a couple of years back, you can go back and amend your taxes to those years and take advantage of it. Or you can file a 3115 with the IRS, which is a change in accounting practices that allows you to go back even further and basically pull that missed depreciation forward. So there's a little bit of the code around it. We get numerous clients and numerous people and numerous CPAs that say, my God, I've been farming or I've been in business for a long time. Why haven't I ever heard of this? Is this something new? And the reality is it's not new. It was passed by Congress and enacted into law in 1960. So it's been around for 63 years. You know, if you look back, taxes were very low, tax brackets were lower, earnings were lower, fertility was lower, and farmland prices were lower back then. So that's a long time in which, a period in time in which this deduction really didn't make a lot of sense. Now, as you move forward into where we're at in life, you know, this is pretty big values hanging out there that folks could be taking advantage of. So what Safra does, we have soil sampling teams around the country that work for us. We go out and soil sample farms. We measure macronutrients, micronutrients. We measure all levels from a plant available fertility analysis and come up with what these values are, which all roll into our report. So essentially, think of it as like an appraisal, you know, doing an appraisal on a farmland and line iteming out these fertility values. there's been methods of this being done in the past. So this isn't new. There's various accountants and CPAs around the country that have been practicing this in the past, but in the past, they used more of a approach based on farmland values in a region. And we do it today much more scientific based, so we can definitively line item out what those values are. So we develop a plan with the grower, putting together what this is going to look like, collect all the soil samples. It's 100% turnkey. And then when we get done, as I said, we roll that up into a report that is complete with all the information needed. In addition, all the soil sampling data, which we collect, which is probably more extensive than the average grower or farmer collects. When we get done with that, all that data comes back to the client. So if they want to use that data for prescriptions or fertility recommendations, they have it. Our reports, as I said, are going to be very detailed. A small report is going to be 15 to 20 pages. The longest report we've done for a larger client was 263 pages. So it is a very detailed document, but it's really the substantiating document that is needed in case there is ever an audit based on this. So it's a very thorough process that we do. Our footprint is pretty much over the whole United States, with the exception of a few states in there, which will probably be on board this season. So we do see a lot of things around the country, from permacrops to row crops in the Midwest. Pretty much you name it, we're getting soil sample data in every day from all over and running this process for clients all over to help them take advantage of this. There's some things that are allowed and some things are not allowed to take advantage of this. And like I said, the law was passed in 58, enacted into January 1 of 60. So purchased, exchange, or inherited land all qualifies for this. Land use, such as crop production, pasture grazing, other things of that nature, are all things that are allowed under these sections and provisions to take the deduction. Things that are not allowed, for example, is land that's enrolled in CRP, because CRP, for example, is something that's growing. You're not grazing it, you're not cutting or baling it. Essentially, that nutrient is recycling there. So you're not really pulling any of that off. So you're not really able to show a definitive depletion rate or depreciation of those nutrients. So there are a few things that don't work. Land received as a gift, for example, typically there's no change in basis when land is received as a gift. So that's one of the reasons why it doesn't work. So there's a couple different ways in which you can go about figuring out that. And Kathy, if you could just go to the next slide, please. I think I was having a problem on mine.
Yeah, your slides were not sharing, Tyler, so we're going to try and take over here and keep up.
Okay, sweet. Okay, thank you. So there's a few ways in which residual fertility load valuations can be done. And the one way that could be done is through a purchase agreement. And that would basically be in the example of Kyle. If Kyle sold me a farm for $10,000 and we determined that the land value was worth $8,000 and $2,000 was the value of the fertility in the soil, I would have a definitive number that I could go and take a $2,000 deduction because I bought $2,000 worth of fertility. The reason why no one does that is because then Kyle would have to claim $2,000 of ordinary income and not capital gains. So that is a way in which it could be done, but it's not a way that anybody does, and it just doesn't happen that way. The way that it works is having a third-party appraisal, such as what we do, non-biased opinion that come in, define what those numbers are and what those values are. All of our soil sampling data that we pull is updated off a local, regional, and national price index monthly. So we're keeping current with what the values of fertility is. And as we all know in ag right now, the levels of fertilizer have been at some of the most historic highs we've ever seen, which obviously makes our numbers in doing this very high, which obviously makes our deductions on behalf of our landowners high as well. Next slide, please. Kyle, can you go ahead and advance that?
We are trying. There you go.
Okay. So that's just a rough idea to give you kind of numbers we're talking about. Our national average is around $1,500 an acre. So when you take a 100-acre farm today, that's $150,000 that can be used as a deduction. You know, if you're in a 30% tax bracket, that's a $50,000 cash savings. You know, on 100 acres, I tell folks all the time, it's the easiest way you can add $500 an acre to your operation. Because right there, you're taking that deduction and pulling that forward and utilizing that as a deduction off your taxable income. So these are pretty big numbers. And there's a lot of value out there that a lot of folks may not be aware of, that they're missing out on, or they could be taken advantage of. So there is a good opportunity to go ahead and do that. Go ahead, Kyle, please. Yeah, so here's an 80 CSR farm in central Iowa, $1,584. You know, on a 71.8 acres, it was $113,000 tax deduction to the grower. You know, a lot of times in ag, farmers and people are always looking at the end of the year to go purchase assets, equipment, etc., because they need a deduction, and they sometimes are buying assets they don't necessarily need. Most folks are sitting on deductions that they don't realize they have, that could help them offset that taxable income that they're looking to defray, typically through Section 179. So there's a really big value out there that they may are missing out on, and we encourage folks to obviously take full advantage of what's out there and what's available. Go ahead, Kyle. So, you know, kind of an overview. We do a project overview, field maps, the soil analysis, the fertility load analysis, the summary results, all the appendixes, everything that come in. As I said, it's a very detailed report that comes back to the client. Typically, we can process stuff in about 60 days. A little bit of that depends on when we can get out on the farm and get it soil sampled. You know, right now in the Midwest, we're going to be doing things obviously after harvest. We're doing a lot of work in the South where harvest has already started. So typically we're looking at a 60 to 75 day runtime to get that data processed and spun around. We have our own sampling crews, as I said, and a team of professionals that work at Safra scattered throughout the US. And we work on soil fertility reports every day. Last slide, please. Yeah, so there's our contact information. If there's any questions or any folks that would like to reach out to us, you know, starts with a conversation, understand your situation. We can give you a pretty good idea based on your state or your county, where you're at, and kind of what those deductions are probably going to look like, and get the process started from there and move forward if the client wishes. So that is a general overview of what we do with Section 180 and with Safra, working on load analysis for clients and landowners.
Well, thank you, Tyler. You know, I've had tremendous interest from my clients for your services over the last year, getting a lot of questions. I certainly appreciate your time and the explanation of this opportunity. Reach out to Tyler if you have any questions. He's great at answering, you know, everything that people throw at him. So next we have Steve Elmore, who is the chief economist at Corteva, to give us a commodity update. Steve started at Pioneer Hybrid over 25 years ago after working at Iowa State University, analyzing the U.S. Farm Bill and the impacts of the formation of NAFTA and WTO. He has presented and consulted with farmers, business people, and policymakers in every continent except Antarctica. He serves on the Federal Reserve and government committees. He has had the opportunity to speak frequently with agriculture, economics, and ASFMRA members. He grew up in rural Nebraska and lives in the Des Moines area with his wife and two college-age sons. One goes to Iowa and the other goes to Ohio. Steve, thanks for joining us today, and take over whenever you're ready.
Thank you. Can you see my screen, Kyle?
I can. Yep.
Okay, I'll try to advance.
Just one away.
Okay. We'll do it again.
There it is.
Okay. Did it advance?
It did.
This is my disclaimer. I have to put this for the lawyers up there. This is not investment advice, but this is truly how we view the market and how we're investing in the market. I got 15 minutes, so I'm going to give you a quick overview of the fundamentals of what we're currently seeing about agriculture and the agriculture markets. Back to your econ classes. Prices change because of supply and demand. Agriculture is still a very good investment. And if you see corn and soybeans and wheat, just as what I have here, the production and consumption continue to increase. That is what is good. So demand is still here. It's a supply issue that drove us to the peak levels. Now we're going to come off the peak. And what I'm going to talk to you about here is coming off of the peak that we had, how we got to the peak and what we're seeing going forward. I will use some USDA data on that. But when you have production outpacing consumption, you build stocks. And when you build stocks, your commodity prices are inversely related, as we all know. What is the market looking at right now? Currently, the USDA is saying that we are going to build corn ending stocks in the US. I have it on bushels and metric tons because I have it for both of you, depending on which way you want to look at it. It's the same data, but I scaled it both ways for all of you. As you can see, we are going to be going to a high ending stocks on corn to levels that we haven't seen since the mid-teens. Okay, that's what's currently in the estimate. On soybeans, however, they are still at low levels, and they could bounce around a little bit, but world ending stocks are expected to grow. Wheat is still tight because of the war in Ukraine and what is happening with Ukraine and Russia. When we translate that to US, again, US ending stocks, and you can see the inverse relationship to prices, just to illustrate the point and what the current forecast is of farm price. This is farm price, not futures price. So that's what they're saying for the yearly average. And they're colored in the bars there for all of you. Let's go around and look at the major crops. Currently, as you see rice ending stocks on the yellow bars over there, they are now at low levels. Many people in the world actually increased their rice consumption because the wheat was limited due to the war. And if you look at rice consumption being high, ending stocks came under pressure. And then India on July 20th this year said they are going to not export non-basmati rice. That accounts for a quarter of their exports. So if you see the India of 17.2 million metric tons, and they're not going to export a 1/4 of that, you can see the countries of the importers in the blue. There are a bunch of smaller countries, and they will impact their food issues. We have created a high rice price. So rice right now is kind of the darling of the agriculture sector because of these weather issues. They're supply issues, not demand issues, that we're currently seeing in the rice market. When you look at rice supply, and I have this for all the crops, there's the February USDA outlook forecast. This is currently where we're sitting here in August. As you can see that they have lowered rice price in the US from what it was because we had higher production coming out of the US. That's the current estimate and what we're looking at currently on rice fundamentals. When we look at wheat fundamentals, we are extremely tight. We had the drought in the Panhandle states and Kansas. I grew up in Nebraska, so I'll call them the Panhandle states and just throw in Kansas. My dad was born in Kansas, so I shouldn't rip on them too much. But the drought really mattered. And if you see what has happened to yield, that was a big factor in driving down production. And if you can see what we're looking at there, but it came out of exports. It's still tight. Hard red is still tight. Soft red, we had a very decent crop this year, a very good crop in soft red. That's why currently the rice or the wheat market is still tight because the export market and the Russia and the war. When we look at specific grain use, the war did create a big hole. All of everyone looked at what was going to happen in wheat. And that's what all the covers in the magazines and everybody else said. Look at what's going to happen to wheat. When we looked at it, because we have feed rations globally, it was more of a feed issue also. You can see what the European Union, former Soviet Union, Russia, Ukraine, which is part of that, how they feed their animals. Meat tastes different in Europe. And there's a reason for that, because they do not consume as much corn in their ration. So it was more than just a food issue. It was a feed issue that's impacted the globe. And you can see what has happened on not only wheat, but you can see what has happened with corn when we've taken Ukrainian corn production down. We were the first company to pull out of Russia when they attacked. Russia and Ukraine going into the war were our two biggest markets. Now you have Ukraine that's under war, and you have Russia that we're no longer in as a company. That's what is currently impacting, and that is keeping a floor kind of on your corn price, or that's higher even with your ending stock levels. The other thing that happened was in Europe, and in Europe last year, the maps on the left are from the NASA GRACE at the University of Nebraska. They update these weekly, like the drought monitor. Everybody talks about the drought monitor, but it's more than that. And if you can see here, they had dry weather, and look at the yields last year in corn coming out of Europe, dropped below 6 million metric tons per hectare. And the US filled that when they were able to export a year ago. That's what created the peak. Now let's get on to the US real quick. The US, we know the drought monitor, everybody here does. We know what it kind of looks like and the moisture output. But here's what the US government said that we were going to do this year. We were going to production, what they said in February is about the same level as production now in the blue boxes. Even though we're increasing acres by 3 million acres, the yield declines because of this crop. The production's about the same. Well, why at the bottom is corn price lower from 5.6 from 560 is what they thought was an annual average to 490. It's due to exports, and the export figure that's down because Brazil has come back with a big production year. It was an export driven issue. It's not a supply driven. It's a supply driven issue coming out of Brazil. And that will cause the prices to come down. And that's why they've come down more than what the US government and the economists thought at the beginning of the year. We also know what the crop conditions are, and the crop conditions this year are we've never seen a pattern like this, that seasonally they go up at this time of the year. I'll be very honest with you. We'll see what they come through with yield. Now we are back in the 10-year average, and it's really a pretty decent crop. The yield estimates and what it would do to your ending stock levels. I ran these for all of us to look at if we get 181 bushels to the acre, we can drive this, that's trend yield. We'll take ending stocks to that green line. If we drop all the way to 168, which probably off the table now, it might come out in the Pro Farmer Tour this week, but it's probably off the table right now. But it's still going to be a building of these last three bars, and that is what is pressuring prices. But we're still having prices that are higher than they were in the mid-teens. Even with this, it's still a positive market for agriculture. And you can see what happened in Brazil. Brazil last year came in with a big crop of a 156 metric tons on soybeans and a 133 on corn. So even the dry weather that we heard all throughout the winter, it did impact Argentina, and it did impact a lot in the 22-23 year. But with Brazil's big production years, we were able to grow in both corn and soybean production in South America. that has hurt our exports out of the US. You can see what the US government has dialed in for what will be planted now, that's 23, 24, and into 24. It looks like they're going to come with big crops, and the market sees that, and that's why you see that forward price currently in the markets, and I don't disagree with those in the marketplace. Again, soybean situation, you can see the same. It's very close. Even with the planted acres being down a lot, it's still very close on the farm price and ending stock levels that the US government had said could happen in February. Again, here's crop conditions, the same pattern as corn. And you look at the ending stocks, it could be a lot lower. This is why there's more volatility and could be around soybeans, because we can be either side of this. And the reason is because we only planted 83.5 million acres as their June estimate. So depending on how this finishes out, and we know where soybeans are in their conditions, it could be on either side of this right now. And that's what the market's looking at. Here's the monthly estimates of the export of the yield estimates that USDA has done historically. And you can see they always change in September. People ask me, are they going to go up or down? Yes, they're going to go up or down. Okay, let's be very honest with you. They are changing methodology is what they are actually doing from September, or from August to September. They are actually in September, they go out and do samples of yields in fields. It's not just farmer survey. So they're going to change their methodology to get their yield. So we are going to get a yield change this month coming up. Okay. We don't know how it's going to go. Nobody knows how it's going to go. Okay. The concerning factor, when we look forward on the right-hand side, I'm already looking towards the new crop 24 and the new crop 24 prices. And as you can see, soybeans have continued to go up. And it's dependent on what we produce here. And it's also dependent on what the outlook looks like for South America. But corn has continued to decline. In doing so, when you divide the ratio, and the ratio, remember, that's what you set your crop insurance in February on, we are to the highest levels at this time of the year in the last 10 years. We just eclipsed that. So what's this show tell you? We are going to increase bean acres next year in the US. We're going to decrease corn acres next year in the US, because the higher the ratio, soybeans divided by corn, will drive more soybean acres versus corn coming up to the next year. With that, thank you. Agriculture is great. It's still a big demand. Supply is catching up. We're still at a higher price level than we were in the mid-teens. But I do want to thank you all for being in agriculture. You help the producers and the consumers because they get lower price, stable food, and the environment. Because you drive production, and agriculture, we drive production, all of us do. We are not on more environmentally sensitive land, and that is a positive for everybody. So thank you for what you do. I'll stop sharing and throw it back to you, Kyle.
Thanks, Steve. I always enjoy your perspective on the markets and really appreciate your time today and joining us. Our next speaker for the webinar is Kurtis Charling. Kurtis is currently Vice President of Digital Product Management for Lindsay Corporation and oversees the digital and technical development of Lindsay's digital and LOT products. Charling has been honored as the 2019 ASABE Nebraska Engineer of the Year, was named to the 2018 Midlands Business Journal 40 Under 40, and was selected as a member of the Farm Credit Top 100, which acknowledges 100 individuals who are positively shaping rural communities and agriculture. Welcome, Kurtis. I appreciate you being here today. You can share your slides when you're ready.
Great, thanks, Kyle. Give me a second here and let me pull up my screen. Okay, can you all see that?
Yeah, do you want to go forward with one just to make sure it's cycling? Okay, perfect.
Is that working?
Yep.
Great. Well, first off, big thank you to People's Company for having me on today to talk about digital irrigation management with you all. It's something that's very near and dear to my heart. I think first off, at a high level, I wanted to talk about Lindsay Corporation in general. So Lindsay Corporation was founded in 1955 in Lindsay, Nebraska, hence the name. Real creative, right? It's now headquartered in Omaha, Nebraska. So we are publicly traded on the New York Stock Exchange as with the ticker symbol LNN. If you're curious, we have about 1,300 employees globally, with 9 global manufacturing locations. Our primary businesses are ag irrigation and then road safety and infrastructure, with ag irrigation making up over 80% of our overall business. We have 2 primary brands on the ag irrigation side. So Zematic, which is our center pivot brand. So the structure, the steel, and some of the control options that you'll see in this presentation today are all under our Zematic brand. And then FieldNet, with FieldNet being our brand focused on digital irrigation management, which again, I'm thrilled to talk to you all more about today. So with that, at a glance, digital irrigation management provides a number of key features and benefits. From a grower's perspective, it really allows you to remotely monitor and control pivots from anywhere in the world. Provides real-time alerts, plug and play add-ons, such as soil moisture and weather data and stations and sensors. Ultimately, providing the benefit of saving time, labor, energy, and water and chemicals. Additionally, with digital irrigation management, it's going to allow you to generate VRI plans, with VRI standing for variable rate irrigation. So varying the amount of water being applied across the field. And then in addition to that, providing irrigation scheduling as well. And additionally, digital irrigation management tools in general, and probably more specifically with our FieldNet product, we integrate with a number of various third-party data sources, such as the John Deere Operations Center, Climate Field View, so on and so forth. So again, there's a number of high-level benefits at a glance. And again, our FieldNet product line at Lindsay Corporation really provides all of these key features and benefits through our various IoT and digital solutions. So again, there are a number of different use cases associated with digital irrigation management, ranging from pivot control and monitoring, pump control and monitoring, valve control and end gun control. There's a variety of reporting that comes along with digital irrigation management, such as water application reports. It can also help with chemigation. So if you're wanting to run chemical or fertilizer through your pivot, digital irrigation management can help with that. Analyzes pressure across the irrigation system or the center pivot system, and then variable rate irrigation, which I touched on before, as well as irrigation scheduling. So overall, this full suite of digital irrigation management tools really can create tremendous value for any grower in their operation by helping increase production, saving time. That's a big one for a lot of growers. Growing up on a farm and feedlot in Nebraska, my dad hammered home the value of time, and his time is money. So that's a big one for a lot of our customers today in this space. Reducing labor, that's another hot topic. Labor is hard to come by these days. And so any tools that can help you reduce that labor burden is important. And then it ultimately helps you simplify your operation, make more informed decisions, data-driven decisions, ultimately, helping you increase or better your ROI from an operational standpoint. So with that, again, our FieldNet product line, we have a fully integrated suite of digital irrigation management tools and options really to fit any grower's operational needs, based on what you're looking for from a capabilities and benefits standpoint. And so if you look at the graphic here on the screen, we provide, monitor only, do-it-yourself solutions, like our award-winning FieldNet Pivot Watch. You can progress up then to monitor and control. And so really that's going to allow you to fully control that system from anywhere in the world, on top of the monitoring capabilities. And then that third tier, if you will, is really the analyzing and applying. So that's more of the software platform and the capabilities that come along with having a product that's accessible in the cloud and that can do some sort of artificial intelligence or machine learning to provide you more streamlined recommendations and data in general. So, and again, I mean, really, any of these options, can get you started, but we try to have an option with number one that allows you to start simple, and then expand and grow, really based on your needs and the benefits that you want to see. So to enable the capabilities and benefits, there's a number of hardware options you can really choose from within the digital ag ecosystem today. And with FieldNet, we have hardware products that will fit a number of different applications, ranging from soil moisture monitoring to variable rate irrigation, as we've talked about before, variable frequency drives, weather stations, chemical injectors, so on and so forth. But from a pivot monitoring and control standpoint, you can actually see the various different types of monitoring and control solutions that we offer today. Again, FieldNet Pivot Watch, all the way up to our computerized control panels that we offer, and really all of which enable the key software capabilities and features that I mentioned before, such as FieldNet Advisor, which I'll talk more about later on. Again, probably the most important aspect of digital irrigation management is really the software platform. And what you see here on the screen is our new FieldNet software platform. And more specifically, you're seeing a large operation on the platform. So a large number of pivots here that a customer, when they log into the platform, gets a really high level, quick overview of what their pivots are currently doing across their entire operation. They can look in the list view as well, but then they can quickly select these pivots, look at their status, and control that pivot all from this single view here. So again, really powerful for growers that want to save time and just be more efficient within their operation, especially on a large scale. It's really convenient to be able to pull up your mobile phone and quickly look at the status of your pivot and control that pivot. Again, here's what you're seeing from a mobile perspective. Again, anything that you can do on the website, you'd be able to do via a mobile application. And so really, here's the remote control and monitoring aspects. You see the variety of controls that a grower can actually do from the platform. They can start the pivot and forward, turn water on, or they can stop the system. Again, it really depends on the hardware that you have on that pivot, but a lot of different capabilities there. You could set end guns. So based on the area that pivot covers, you can turn your end guns on and off. I guess for those of you that don't know what an end gun is, it's the gun that's at the end of the system that sprays water out into the corners of the field to make sure that you're getting areas. If you have a square shaped field, that you're making sure you get the areas in the corner. I mentioned VRI plans before, variable rate irrigation plans before. Here you can see where we're actually changing the amount of water that an irrigation system is applying across the field based on the sector or the degree of that system. And so as that pivot moves through the field, we're actually varying how much water is being applied in each of these different sectors. And then last but not least is water pressure. So understanding how your system's performing throughout your field, and then providing you diagnostics. If you were seeing areas with low water pressure, you could easily reach out to your dealer or go out and troubleshoot that pivot to make sure that there's no downtime, or that you're making sure that you're getting enough water in the areas that really need water at that point in time. And so again, there's a variety of benefits, as I mentioned before, with digital irrigation management, and the software platform is really that enabler of those capabilities and benefits. So finally, probably one of the most impactful aspects of digital irrigation management is irrigation scheduling, which we here at Lindsay provide through our FieldNet Advisor product. So overall, irrigation scheduling informs growers on when to irrigate, how much to irrigate, and then where to irrigate. And so knowing these things from a grower's perspective results in, data-driven decisions that ultimately provide a variety of savings such as time, water, fertilizer, energy, all while maintaining or even increasing production. So irrigation scheduling is a critical benefit that digital irrigation management can provide. So obviously at Lindsay, we wanted to prove that. So from a value creation standpoint, with the irrigation scheduling, we conducted a number of case studies on the benefits it can provide to growers and their overall operation. And so the first case study that you're seeing on the screen was actually conducted here in north central Nebraska. And so we had a grower that wanted to have a better, more informed way of managing his irrigation across his whole operation. And so he was looking really for a solution that maximized or optimized his yield while reducing water consumption and driving down pumping costs. And so the solution here, we conducted a control experiment with Fieldman Advisor managing irrigation recommendations for the season. And then on the control fields, the grower actually managed irrigation. And so for this particular setup, we looked at corn, and they all had the same soil types, and the fields were within 1 mile of each other. And so the results ultimately for Fieldman Advisor were a 3% increase in yield, so modest, right? But a 17% reduction in water and energy consumption. So ultimately that resulted in close to 10 million gallons of water saved. And at the time, this was done in 2018, so a $35 per net profit gain per acre. That number is obviously substantially higher now with corn prices where they're at today. So again, that solution and the hardware easily paid for itself within that first year of running it on the operation. The second case study that you're seeing here was actually in Georgia. And so in this particular case, we had a grower that wanted to more effectively manage irrigation on his fields, but he had a lot of variability in soil types throughout his fields. And so he was looking for a solution that could control individual sprinkler valves. So our precision VRI product was included in this project, and then automatically generate precision VRI plans so that he didn't have to spend each day building a new VRI plan for that field. And so ultimately he was looking to maximize yield across the entire field while accounting for variability with his irrigation schedules. And so we took the Zematic Precision VRI product and combined it with Fieldman Advisor, and we implemented that on one field while the neighboring field was managed by the grower. And this was actually an independent R&D project between the USDA, University of Georgia, and the local NRCS down there. And as you can see from a results and benefits standpoint, they were very positive. So 57% yield increase, as well as a 57% reduction in water and energy, overall led to a $341 net profit gain per acre for this particular grower on that one field alone. So, and again, this was a corn crop. So pretty substantial payback for that particular farmer in this particular case study. I guess with that, I think I'm probably over time, but again, I wanted to thank the People's Company for having me on to talk about this. Again, I think takeaway message, if Lindsay has a variety of products that can help with digital irrigation management and really help you realize the benefits and value that I talked about today. So if you have additional questions or want to learn more, please don't hesitate to reach out to me via email, which I'm showing here on the screen. So with that, Kyle, I'll turn it back over to you.
Thank you, Kurtis. I really appreciate the relationship we've developed with Lindsay over the last couple months and the irrigation work you guys do. So final speaker is Mark McLaughlin, and he will be presenting on succession and estate planning. Mark is based out of Ankeny, Iowa, and he's the co-founder of Farm Estate GPS LLC and grew up on a family farm near Defiance. He graduated from Iowa State with a degree in mechanical engineering and joined Farm Financial Strategies in 2005 after he saw the value of his family going through the planning process. Shortly after, his father passed away in a farm accident. Because of their planning, the farm passed to the 5th generation, and he now shares that land and hog operation with his brother. Mark understands the need for proactive strategies on both a personal and professional level. Thanks for joining us today, Mark. Are you ready to present?
Yeah, you bet. All right. Assume the screen came through all right.
Yep, it did.
All right. Well, yeah, first of all, obviously, thanks to Peoples and Kathy for setting this up. Thanks, Kyle, for the introduction, and had 3 great presentations. I'll try to keep the streak alive as we bring the webinar to the close. But today I'm going to talk about farm succession and the impact it has on the families and the ag businesses that support those families. So what do you think about when you hear estate and farm succession planning? For some families, they think wills, trust, maybe powers of attorney. Other families might think of entity structures, LLCs, S Corps, C Corps. They think about the attorneys and the accountants that it takes to put these documents together. For some families, though, when they think farm succession, they're more thinking of the longevity of the family farm. They want to be sure that their child's child will have an opportunity to farm the family grounds someday. And for some families, quite honestly, and understandably, when they think of farm succession, they say, Mark, to be honest, that kind of makes my head hurt. There's so many moving parts to it. I just think of being overwhelmed, and we don't want it to come to that. We want to break it up into manageable parts. And so for farm succession, to me, when I think of it, I think of a scenario where you've got a family, maybe 900 acres, 3 kids. As long as the parents are sound mind and body, it's a pretty easy conversation with their farming son or farming daughter to determine how the farm needs to be operated. You know, it's a very, very easy channel of communication. But then you drop it down one level, and now you've got the farmer talking to the siblings. And usually the siblings aren't trying to cause a problem, but they're just a little bit removed from the situation, and it's a different conversation. And then you go one more level and they have kids and there's all kinds of cousins and it's great. But are you seeing what I'm starting to see here? There's a lot more red than green. And within 2 generations, we go from a 900 acre operation to 100 acres. And that's almost a 90% drop. And that's without any divorces, without any family issues. That's just the default for family farms. They naturally get smaller and smaller, but yet the trends in agriculture are saying, hey, we actually need farms to get bigger if we're going to support another family. And so that drives the need for a farm succession plan. I'm going to go through another example here. Let's say you've got a family, they have 800 acres and it's going to go to the 3 kids. Now, I know these numbers are going to shift based on where you are in the country. But let's say that the land's worth $15,000 an acre. So you got a $12 million asset. And to get to that level, maybe they took on some debt. In this example, I used a 25% loan to value. So there's $9 million of net equity that'll someday go to the 3 kids. If we assumed a 30-year note at 7.5%, that's about a $241,000 principal payment. And that works out to about $300 an acre. Okay. Now, would your bank finance that? Most bankers is probably selling the line saying, heck yeah, Mark, if you know these guys, make that introduction. But let's go down one level. Let's say that mom and dad pass away, and now we still got the debt to service. We've got $3 million of net equity for each of the kids. And let's say the farmer has to rent the ground, and maybe their family rent gets bumped up to a market rent because they're dealing with siblings now instead of the parents. And by the time you take out the debt service and the property tax, maybe they're netting roughly $70 an acre. And so if they all own this ground together, by the time they pay off their expenses, each child nets about $18,000 a year in income. And I don't care who you are, if you get an $18,000 a year and you didn't have to put anything into it, that's not a bad deal. But at some point, they start thinking about their financial situation and their spouse and their kids, and they start to wonder, well, would I be ahead if I just sold? And that gets to be the problem. We look at that now, and we've got the same farm that had 25% loan to value. Now, if one heir sells, we're looking at a 50% loan to value. So now they have to service the existing debt plus the $3 million buyout from the seller. And now the land payments jump up to $483,000. a year in principal and interest. And we haven't added any ground to this operation, but now we're looking at $600 an acre in land costs. Would the bank finance that? It's starting to get a much more difficult situation. And I know that land is a great investment, and I'm not saying that the off-farmers can't or shouldn't own land, but we often look at it and say, well, it's different than buying ground outside the family. If you want to partner up with people, they've got a great team, you can line up your banker, and you can be strategic on adding more land into the fold of your existing operation. But there's usually a premise that family ground is not supposed to be for sale. And so then it's just the income value. And I just wrote an article for Successful Farming magazine that talks about, should we be looking more at the income value when it comes to family ground? And so let's say now the second heir says, you know what, my sister might be the smartest one in the bunch. She sold hers. She's got $3 million to apply towards her goals. Maybe I'll sell too. And it's just a domino effect. And so now we've got a $6 million buyout, and now the land costs jump up to $900 an acre. And that for sure will not pass the bank stress test for the underwriting. So we want to figure out how can we multiply these farms instead of dividing them. And I'll kind of go through our 5-step process. One is to get education. So for the last 18 years, I've been working with farm financial strategies on farm succession planning. It's been great. But a couple of years ago, Myron Friesen and I, we started another business to complement farm financial strategies called Farm Estate GPS. And that's where we try to provide the education tools so that farmers can make informed decisions. They can understand the issues and their options and see which strategy might work best for them before they start implementation. But then at some point, we have to look at the distribution strategy. And right now, a lot of families just have the default where everything goes a third, a third, a third. And it's kind of crazy. We raise our kids to be independent, have their own interests, find out their God-given talents. But what do we do in the estate plan? Most wills just split everything equally amongst the kids, like there's no bit of difference between them. And so maybe we need to target specific farms to the farming area, or identify which assets should go to the farming child and which assets should go to the off-farm area. But then we have to base it on a valuation model. And I look at it as there's two kinds of values out there. There's market value and there's family value. And sometimes it's hard for the family to identify what that family value looks like, but it's usually at a discount. And the crazy thing is, you could say a 20% discount would be very common, but you think what's happened in the ag market, 20% takes you back, maybe 18 months ago, depending on which region you're in. And so you have a farm son or farm daughter with 20, 30, 40 years of sweat equity that might only get translated to where prices were a year or two ago, and it still didn't cash flow back then. And so we need to look at the funding strategy, and this is where it's important to do the math. Maybe there's cash in the estate, maybe life insurance comes into play, or maybe we have to do some financing on the back end, but we want to make sure that it cash flows both today as we prepare for it and after mom and dad pass away. So you're not spending 20 or 30 years on something that doesn't cash flow. And then, of course, we want to have the estate management. We want to make sure that we don't lose out to an estate tax, income tax, probate. And that's where we collaborate with the family's existing legal and tax advisors. When we bring families to the professionals, they're informed, they're organized, and they're motivated to get a plan in place. And when I look at the impact of farm succession, sometimes it's interesting, but the parents almost get overlooked. They're so used to sacrificing for the farm and sacrificing for the kids. We can't forget that, hey, mom and dad worked hard for this. They need to make sure that they're getting their adequate retirement income out of it. And they also want to make sure that we're accomplishing their farm distribution goals. Then we also want to look at the farm operator and say, there's different stages in life. While mom and dad are sound mind and body, maybe there's a period of time where they're incapacitated or in a nursing home, or maybe after the first one dies, half the land goes into a trust. And then on the second death, everything goes to the kids. At each stage, we want to make sure that we have the management provisions that say who gets to make the decisions, how we're going to come up with a rent, and how we're going to keep this thing cash flowable. Because if it doesn't cash flow, then what's the point of any of this? And when you have a farm succession plan in place, and the farmer knows, all right, here's my number, here's what I have to do to keep my family ground intact. That's what allows them to be able to expand and take on new projects, and it allows them to be competitive on the rent that they can pay to their other landlords. But then with that, we also want to be fair and equal, show value to the off-farm heir. And that fair and equal is always the $1 million question. But are there things that the off-farm heir can do with liquid cash or non-farm assets that they can't do if 100% of their inheritance is tied up in the land equity? They can't borrow against it. We prefer they don't sell it because what we talked about already. And so we want to create a path where they can pursue their own goals and their own interests for what makes sense for them. And the interesting thing is, if we can create an exit strategy that actually works, there's nothing saying the off-farm heir can't plow money back into the farm operation. And now we're looking to multiply it instead of divide it. But then it's happening because they're choosing to be in a business relationship. We're not forcing them to be in a business relationship. So for a successful plan, we really need to address all three of these: the parents' income and goals, cash flow for the farm operator, and a path that's fair and equitable to the off-farm heir. But farm succession extends beyond that. I mean, if we look at everyone that's involved in supporting the family farm, we were also looking at the impact this has on the banks, or maybe dial down a little bit, the loan officer. You can have the best loan officer. He cares about your operation. He knows your family. But if the default plan happens and you have to start buying out the off-farm heirs and you go beyond the loan constraints, there's nothing that he or she can do to help you. And if you look at the financials, who are they going to be more inclined to give a loan to? Somebody with a plan that has 100% equity, or someone who has to buy 2 or 3 siblings out and has much less equity. And so we want to put the farming heir in a position where they can continue to expand and utilize the services. Same thing for ag businesses. I mean, if you are spending the next 20 to 30 years buying out your siblings, guess what you're not doing? You're not advancing your purchases for the products. You're not buying the services. And you think of what this means for the ag businesses. Yeah, somebody's going to use their services. Somebody's going to buy that seed corn. Somebody's going to buy that equipment. But you look at the cost to replace a client versus the cost to retain a client. And, that's why they have some vested interest in trying to keep this farm operating in its one unit. So real quick, I just want to hit the estate tax sunset. Right now, we have the best estate tax we've ever had. An individual can have 12.9 million of estate value before there's a 40% estate tax. So between a husband and wife, we can have almost 26 million before that 40% tax hits. And that number is actually going to go up over the next couple of years. But January 1st, 2026, that law sunsets and it goes back to the old law. And that law was set at 5 million plus inflation. So we're guessing that it's probably going to wind up being around $7 million per person. So a $14 million threshold. So what do you do with that? Well, I say plan, don't predict. Here's what I mean. Historically, every time this issue has come up in Congress, they have acted to make the estate tax better. But you also look at 2 years ago, we had some crazy tax law proposals floating around Congress. And we were only 2 votes away from having substantial fundamental changes in estate tax law and real estate laws. And so I'm not here to say, yes, it will happen or don't happen. It won't happen. I'm not going to be an alarmist. But as we get closer, we're going to be experiencing a lot of people that are a little bit alarmist. And our clients actually can sometimes start to get stressed out. And that's not a good environment to be making long-term decisions. And so I would say that we need to evaluate the potential exposure, see how much risk there really is. And then this next step, you know, it might not make sense at first. Rather than going and changing all your estate documents and getting aggressive on the estate management, I would propose you develop your farm succession strategy first, and then get your estate documents in line to handle a $14 million threshold. And here's why. Ultimately, you want to know where your farm is going to land, because how you structure the estate management tools could impact that. Also, the farm succession, in my experience, that takes probably 85% of the time, versus the estate management, setting up wills, trust, LLCs, and so forth. That might be 15-20% of the time. So that's why I say do that first. I'd still get the estate management tools in place, maybe the higher level, you know, looking at LLCs for discounts, maybe irrevocable trust, idiots, slats, you know, but go ahead and get that work done, but maybe hang on to it. See how this plays out. As long as you don't die, you know, it's not going to come into effect. And if it comes to pass and you didn't need it, yeah, you spent some money with some great attorneys and accountants. But I look at that as a call option on the future viability of your farm. And then between now and then, you've got a few years where we can start looking at gifting, but just make sure that it's aligned with your farm succession strategy. I know of families that have gifted $10 million or more of land to their kids because they were scared this last go around of what was going to happen in tax laws. But they didn't think through, okay, well, that means that all that income off the ground goes to the kids, not the parents. And that means that the parents lost control. And now when we want to go back and set up the exit strategy or the rental options, the purchase options, we have to get permission from the kids before they can do that. And so I guess I'm encouraging people to list out the instructions before they make that gift. And so with everything that's going on right now with elevated land values and high interest rates and changing tax laws, you know, it can get a little bit confusing. And I kind of like to close with this slide. You know, what do you see here? When you look at this, are you saying that opportunity is nowhere? Or are you looking at opportunity is now here? Yeah, I think we're at a different level in the ag environment, but there's still a ton of opportunity to do good planning and successfully pass the farm to the next generation. And with that, I'll be happy to answer questions and turn it back over to you, Kyle.
Thanks, Mark. I really appreciate your time. You know, I'll get right into questions. I'm planning to do one or two for each of you, and then if we have some time, then and if we have questions from the audience, then we can ask them as well. Mark, you know, I'll start with you. Does your group do the entire estate planning? You know, if a client comes in, will you handle everything from the beginning to the end, or do you engage local attorneys, or how does that look?
Yeah, great question. So we see it through from beginning to end, but we work with the family to identify the assets that make up their estate, how they're owned, current value. And then we do a snapshot analysis of, you know, based on where they're at today in the current legal documents. Here's how the assets would flow. Here's what it means for potential estate losses. And here's what it means for the farm succession. Here's the cash flow required to do a buyout. Here's the pros and cons for both farm heirs and off-farm heirs. But then we work with, we collaborate with their existing attorney and their CPAs, because we're not trying to break up relationships at all. We're trying to actually build the relationships and get everyone on the same page. So then we help the client prepare, and then we go with the client either in person or virtual to meet with their attorney. And then we read through everything to make sure all the T's are crossed and I's are dotted.
All right, thanks for that. Very, very appreciative. Tyler, you know, if a person were to get audited by the IRS and they had the 180 deduction, who would be the fact-checking entity or group to value, to value that deduction to make sure it's accurate?
Yeah, good question as well. So we have a full-time CPA on staff, and that CPA is there today to review everything ahead of time before anything goes out to make sure it's compliant. That CPA is also there as a liaison to work from a client that may want to do this, but isn't familiar, or his CPA isn't familiar. Our CPA is there to kind of coach and walk them and talk them through all of those steps. Of the thousands of clients that we have done, to our knowledge, we've only had one client audited to date. That client had a very substantial value in his deduction, and he went through his audit with 0 adjustments. So it's been relatively clean, or 100% clean from that standpoint, but we do have staff and support if that's needed.
Okay, perfect. And then just a quick follow-up. How do we go about informing like your CPA or your CPA about this deduction? Do you guys handle that discussion initially and work with the landowner CPA, or work with the landowner directly, or?
Yeah, so if a client wants to do it, they can reach out to us. We have a lot of ancillary information that we can send to them to get to their CPA, or schedule that phone call and have that CPA to CPA phone call, or us to the client. A lot of times what happens is the landowner calls us, tells us, hey, what their situation is, what they have. We look at it and say, yeah, we think you'd be a great candidate for this. Let's get your CPA on the phone if he's got any questions, or if you've got any questions. Then we send out a secure data link. They upload their information, and it's a DocuSign agreement from that standpoint. We get the ball rolling.
All right, perfect. Looks like there's a question for you in the Q&A about fees as well. I'll let you handle that one. Okay, next I'm going to go to Steve. If the Russian-Ukraine conflict were to be resolved this weekend, prior to the 2024 crop season, what impact would you see on U.S. grains?
I would say not much on US grains, to be honest. The main impact would be on wheat, and wheat we're already tight here because of the drought and because of the hard runner problems. On a global basis, though, it would be, your Eastern Europe and the European price, because that would hopefully go out. As they shot down the plane today, I don't think it's going to be solved anytime soon, to be honest with you.
Yeah.
Sorry, they didn't shoot it down. It crashed as an accident, is what I heard. Sorry, I shouldn't have said that. So,
all right, just to follow up, you mentioned rice. You're bullish on rice. What is there any Midwest grain or crop commodity that would surprise the general public that wouldn't be your traditional corn, soybean, wheat that may be worth looking into, in your opinion, to grow in future years?
There could be the biofuels crops and how those develop, because we're going to be short of oil. We are a net exporter of soybean oil coming out of here. I'm not saying that soybeans are going away, but soybean oil. So it could be your oil crops. And the other one, corn is the big value, like you said, on a global basis. But the other one that misses some people is the malting barley. We've been tight there, but you gotta have contracts for malting barley and everything else for that. But it'd be your oil crops or the other ones, but it's still going to be your big crops. Farmers are smart. There's a reason they grow these crops right now.
Perfect. Yeah, Mark, it looks like, thank you, Steve, for that. Looks like you're heating up in the Q&A as well, down below. So I'll go to Kurtis next. I was recently out in Alaska. Chuck Powell, from the Western US, Lindsay, great trip. Got me thinking, you guys as a company, where do you see your biggest growth potential in the US or maybe the world as far as your irrigation products? And I'm putting you on the spot here, but Alaska is kind of the last frontier for ag. And that was certainly an opportunity up there that I was thinking of. So what are your thoughts on that?
Yeah, who would have thought pivots in Alaska, right, Kyle? No, I mean the Pacific Northwest is always a good region. There's a lot of large growers, large operations out there. A lot of high value crops too. So in terms of the US, that's a big area. I mean, globally, by far and away the most growth we've seen is in Brazil. We have a factory down there, and I can tell you right now that market is growing pretty substantially for us, and it's one that's got some good staying power too, Kyle.
Perfect. Quick question too, as you get into allocations and allotments for waters, for water, does your technology allow a pivot to shut off, seamlessly once those daily allocations or yearly allocations have been met, and keep the client up to date on those?
Yeah, that's a great question. So, and the short answer is sort of. So we do provide, I touched on it before, but the irrigation scheduling tool that we provide called FieldNet Advisor does account for water allotments and then schedules irrigations around those allotments to make sure that you're using that water that you have available most effectively and efficiently. The challenge today is, and I think you're talking about automatically shutting off the pivot once your allotment runs out. There's a lot of challenges with that in terms of automatically shutting things down or starting things up that we haven't quite gotten into yet. We have the capabilities to do that, but again, we want to make sure from a safety perspective that we're considering the ramifications of automatically shutting things or starting things and shutting things down. But at the same time, like if they, if the allotment, if the water supply, whoever's supplying that, shut off the water, I mean, we have solutions in place like pressure sensors that would automatically shut that pivot down if there wasn't any water there at the pivot point. So hopefully that answers your question, Kyle.
No, that's great. I appreciate that.
Yeah.
Mark, got one or two more here. What's the first steps? When someone comes to you, or I know there's probably a lot of people on this webinar that's saying, gosh, I don't have anything in place, something I need to think about. What's the first step they need to do to get in touch with you or to make that first connection?
Yeah, for the first connection, the simplest thing is just pick up a phone and schedule a meeting, or actually you can go to our website. We've got a link there to schedule a preview call. Sometimes that's the quickest option, and then we can learn a little bit about their situation, their family, and their operation, and map out our process, and then we can decide what's the best step to go forward.
And quick follow, the generation that we're kind of in, you often hear there's no estate planning. We'll let the kids figure it out type of a thought. Are you seeing less of that as a whole, or is it still pretty, your service is met with a little bit of stubbornness and resistance at least in that first step?
Yeah, stubbornness and resistance. That's definitely still a thing. I would say over time, families have become more informed, and they understand it a little better, so they are more open to it. But that could be a tough deal if you can't get a family, or you can't get a parent to step to the table. I guess I'd encourage them to just start out of respect and empathy, and understand that this is a hard thing. Sometimes families won't do the planning because they don't really like talking about their own mortality, and I get that. Sometimes they don't want to relinquish control over their farm, and it doesn't have to mean that. Other times they just have a really difficult time articulating what it is they actually want to do, and they don't want to upset any one of the kids. And so you just kind of got to get over that false narrative and saying, no, we want to have those conversations so we don't have those problems. And I guess I would just encourage them to ask good questions. Don't ask yes, no questions, but take it back to them and say, Mom, Dad, tell me, how did you guys acquire your land? How did Grandpa set it up? What did you like about that? What didn't you like about that? If that was to happen today with these values, do you think you could do that? And if I'm in that spot, coach me up. How can I do that? And get that conversation going. And hopefully, then it can lead to having that discussion. And if not, you might want to bring another family member in and just try to make that next step as easy as possible.
That's great. Well, hey, I think we've addressed a number of questions here. Thank you for responding to the Q&A below, each and every one of you. And we're running short on time. I was hoping to end this around 4:20 today. Sorry if we weren't able to get your question, and thank you for the speakers for being here. And and presenting. If you're interested in our land management services, please email us at landmanagement@peoplescompany.com or give us a call at 888-800-LAND. A copy of this video presentation will be available to everyone tomorrow. I believe that gets emailed out, and I think it should be on our website as well, if I'm not mistaken. Till next time, stay cool in this heat, and I wish everyone a successful harvest. Thanks, people.